Hello, how are we doing? Today is Sunday, and I'm going to be doing a market review of Monday, the 24th of November. Here we're going to start. So, on Thursday, we had this big range down. If I go to the daily time frames, let's remove all drawings. Okay. So here's Monday, right? We take this fair value, this low right here. That was also a new week opening gap, unfilled. And under this NWOG, it's actually a monthly fair value gap. Booking solution block. Monthly solution block. That's what that shit is. You could grab the whole range. You know, grab the midpoint. Like if I were to grab the midpoint of that range, I would have that there. And then I'll grab this fair value gap. Hope my audio is working fine. So here we have this area of interest. We come down and we take that big sell side, that NWOG. We take that big low. Market's been shot, it's been here. Now we come and take this low. A significant low, because under this, it's not much. Just this range. But that's not really what we're worried about. But we have this big range right here that we take this low. And now I could expect this low after being taken to have a redelivery to about the midpoint of that range. So here, I'll grab the midpoint of this range. Nothing complicated. Cool. And then I have these two new week opening gaps right here. It was this one and this one. I'm choosing these two specifically because they are within the range that I'm using. So because we're working within this range on Monday, I have these NWOGs marked out. Okay? So I'm gonna turn off the indicator. I only have 3 marked out. I have this one, and this one. Nothing complicated. We took sell side on the higher time frame. We mark out the range that we took lower. And now, what do we have here? We have some inefficiencies. A 1 hour unfilled fair value gap. I'll mark that out as some buy side. All right, cool. So here is the new week opening up for this week. We open and we don't fill it all the way, and we're going up, right? If we go to the regular trading hours gap, the bottom of that regular trading hours gap is actually right here somewhere. And as soon as we open at market open, we don't go touch it at all. We just go flying up, making that also a sign of bullishness. This a sign of bullishness. The fact that we took the higher time frame sell side and we had to go into a higher time frame midpoint and manipulate with some lower time frame buy stops. It all comes into why you could catch this long. I'm going to show you right now. So let's go to the 1 minute. We have that NWOG. And we have that buy side, that 1 hour unfilled. We have that 0.5 of the range. By the way, you can mark out this range if you want to play it safe, but because this leg is so fast and down, and this is like very inefficient. You see how it's like very fast here? We have to like work our way to get there, and then we go up. It works too, but this also has to do with why we started going higher here, because we have this range into a bigger range that gets into a different midpoint. It doesn't really matter as long as it has to do with confluences, like this range confluencing with this buy side and this NWAG, and this not being filled. Everything that correlates to us being bullish in general, right? 9:30 we open, and we have this buy side right here we're interested in. Here I have, I'm gonna mark out this and market open. First presents at 4 a.m., so here's 4 a.m. open. There's no fair value gaps until right here. First presents at 4 a.m. fair value gap. Here I have 8:30 fair value gap. 8:30 open right here. Fair value gap right here. Right, so we're using this to fuck around, right? This is a big area to be short end pre-market. Market opens and we absolutely fly towards it. About 170 tick candle, very volatile. We take the buy side. Right here. And we go and you take this buy side. In about 3 minutes of market open. And then we go and fill the 0.5 of the range. And then we don't hit the NWAG. And we start retracing lower after we took buy side and hit the 0.5 range, which is normal for it to retrace. It's what I expected it to do after reaching this area. But us not reaching this NWAG is an amazing way to find out if these shorts are fake or if they're a higher probability. Like, I know because we haven't reached this NWAG and we're retracing deep into these shorts. As soon as we like fill this fair value gap all the way, I know we are not going short. We go into this first presented fair value gap at 9:30, because 9:30 opened. Here's the first presented fair value gap, right? You look at this range, it's also aligned with the 0.75. Here's 75. I mark out that fair value gap as the first presented. Another confluence for it to go higher and reach this NWAG is because we didn't reach these buy stops, making this inefficient. Kind of like the regular trading hours, kind of like this, not reaching its full balanced range. Like it's not balanced. It's moving. It's showing that it wants to go higher by not reaching here, by doing all of this. It just shows everything. So here I have the biggest fair value gap in this range right here. You want to mark out the biggest one. You could have this one too, but it's best to have the biggest one because that's the most significant one you want to use. So this is the biggest one we have in this range right here. We inversed it right here. I entered long. My stop loss was under this bullish fair value gap that was also aligned with the lows of this inverse fair value gap. So I played it safe right there. I entered into some drawdown right off the bat. And I wanted a reaction off of this fair value gap, which it gave me. Then I wanted to see us close above this premium of the bearish fair value gap. I want to see us inverse it now. And as soon as we took this high right here, obviously I'm looking at these highs as like a area for breaking even or trailing my stops. So this right here, this high, we inverse it, go lower, and we're about to go higher after using this bullish fair value gap. Right here, I would obviously trail my stops because I'm long right here. I would trail my stops to the fair value gap after we take this high. I don't want to see us come back to this fair value gap. And I would also scale in because I would want to see us go fast. Also because it's 10 a.m. open. 10 a.m. open means on the 1 hour time frame, the 15-minute time frame, and the 30-minute time frame, every time frame. We're on the 4 hour, everything. We're opening, and we gotta move, right? We're gonna move because it's 10 a.m. It's time to move. I'm about to show you another example of why it's time to move. Here, it's 9:54. You know, 1 minute, 5-minute candle right here, and the next 5-minute candle opens right here for the 9:50 macro. I target this and new week opening gap as my target. This buy side supporting it, right? Hold on, my shit's broken for some reason. So I got this buy side right here. This is how I went long. I scaled in right here. By the time I scaled in, and we took this right here, my entry was now right here. And by the time we took this candle, and we closed right here, making this bullish for rally gap, I was fully break even. Because now my stop loss is supported by these sell stops and this bullish for rally gap. I wouldn't want to see price retrace and go deeper and stop me at a break even. I wouldn't want to because it's 10 a.m. open, it's time to move. And I wouldn't want to be a part of that. Like, yo, it's time to move. Anyways, that's how I caught that trade. This trade also, I'm going to show you why. When it's time, it's time. So here, if we have that range, this is the 0.5, and this is the 0.75, and this is that new week opening gap I marked. Here, we go down and we reach the 0.5 range of that sell side range. We come lower and we use the first presented 10 a.m. This is the first presented 10 a.m. for rally gap because 10 a.m. opened right here. 10 a.m. opened right here. We use this for rally gap, and now we're using it to go higher. And we make this bullish for rally gap right here. And you're probably thinking, okay, we reached the 0.5 of the range. We had a fucking sell side run. We took these lows, and now we're taking highs right here. We're taking highs. Oh, we're going up, bullish for rally gap, buy. You get stopped out and you wonder why. Look at the time. It's 10:15. This is not a really optimal time to be in a time frame or in a trade because there's really no point of delivery unless you were to be like on 10:30, like a macro, for example, like 9:45 to 10:15, or 9:30 or 10:30 or 10:45 to 11:15, 11:50 to 12:15. Those areas, you want to be in like a time frame, or in a time frame where if you were to enter a trade, you could have time supported. Okay? Because if you don't have time supporting your trade, if you get stopped out, that's completely your fault and you're just really impulsive, you know? And you're just not following the rules. So before 10:30 it forms, we have this bearish for rally gap. Take this lows. We trap people going short. Right? Probably bearish pattern, double top, some shit. We're trapping people short. We go up, bullish for rally gap. This new week opening gap is confluencing this bullish for rally gap. So we mark out this bullish for rally gap. And what happens right here? It's 10:30. 10:30 hits it, we go up. As soon as we take this high, trail stops at this low or break even to this bullish for rally gap. Take this profit within minutes and you let it ride to the new week opening gap. But that's a good example of why people get confused with trading, because time is first. This trade right here, I wanted to make sure I was within the macro, 9:45 to 10:15. I also entered long on my prop firms right here after taking this high right here, because I knew this was a really high resistance area, and if price were to go high, I wouldn't want to see us really retrace lower. So as soon as I saw this speed and this candle right here at this high resistance area, I entered long right here. As soon as price flew up right there, I broke even. this is a trading model I have where it's like really volatile areas and I break even really quickly with high leverage, but that's a different topic. But this is the market review for Monday. What I saw, how you could have won those areas, and how, you know, you could avoid bullshit completely, you know. And that is my market review today. It was like a not too long a video. I think it was about 7 minutes, but that was it. Basically, it is. We take the sell side. We look at the range we're working, and we mark out the PD arrays within that range. Like that new NWAG from a couple weeks ago. All these things, they're actually what I like, and that's what I came to do the market review. So it's a 15-minute video I just saw, and yeah, that's my market review. You have a good day. Hope you learned something, because this is very insightful and it's made me a lot of foundation of what makes me comfortable in trading. Hopefully you could have some of what my foundation is and implement it into yours. This is not financial advice, and you know, good luck, good trading. You know, have a good day.